Thank you, Mr. Chairman. Thank you, Mr. Secretary. Mr. Secretary, would you agree that the root cause of the financial collapse of this country was the fact that subprimes were not regulated too closely?
No. I would say that it was one of a number of factors, but it was not the most important.
But if people had not been allowed to buy homes they could not afford, that was the bad product in the first place. Isn't that correct?
I agree that that was the basic. What happened to housing prices?
That's correct.
Partly facilitated by what happened to subprime mortgages, made everything more perilous and worse.
Well,
there were other things happening than simply the subprime in that.
Right. A lot of people believe that if the Fed had done its role, statutory role, which is to govern instruments and underwriting standards with regard to those mortgages, that we wouldn't have had this meltdown. In other words, the basic product that gave rise to the derivatives and the CDOs would have been sound.
I don't think I'd say it quite that way. Remember, as we just said, a lot of what happened in the system was we allowed institutions to underwrite a bunch of stuff, sell a bunch of stuff to people who couldn't afford it. They were outside any scope of authority provided by the Congress with no effective deterrence.
But the Fed,
you can't look at it quite through the prism of the authority that Congress gave the Fed and the other supervisors because of the absence of any authority over.
No, I understand, but the Fed had the authority, did it not, to require, as it will beginning October 1st of this year, that there be written proof of a person's income when applying for a mortgage.
Again, for the system to work.
No, I understand that, but did I make the correct statement or not?
Well, again, I don't think we're disagreeing. I think that, as I've said many times before, I think the failure, not just of the Fed.
No, I understand. If we're not disagreeing, why don't you just say that what I just said was correct?
I believe that this crisis would have been less damaging. There would have been less damage to the economy as a whole if authority had been stronger, used more effectively, used earlier.
I understand.
By a bunch of other authorities.
The point I'm trying to make is the authority was
even on the systemic risk, the stability function, which is so important. What we're proposing to apply conservative capital requirements on these large, complex institutions. They can make sure that the payment system, which is what spreads crises, runs with tighter capital margin requirements. Those are important authorities that are not as clearly established in law as we think is necessary. And that would be a good thing to do for the country.
Okay. I guess the point that I want to make is when you take a look at the 600 pages of legislation that you proposed, if you take a look at Chairman Frank's memo today talking about, exempting different groups from this new Consumer Financial Protection Agency, to me it's going to be almost chilling for groups to know who is in fact regulating them. Banks right now are being chilled to give money because of oppressive tactics by the regulators. Good loans in the past have now become bad loans because of the mixed messages coming from the regulators, and now there'll be exemption as to who's exempt from this new Consumer Protection Agency. I mean, I'm glad lawyers are, auto dealers. It says accountants and other businesses that perform tax preparation services, but accountants that do business planning evidently would not. So what you're proposing here is a whole new set of regulations, and the people, first of all, won't even know whether or not they're regulated, and second of all, what laws would apply under the regulation.
The gentleman's time has expired. We added some time for my intervention, so the gentleman's time has expired. And
thank you.
The gentleman from New York is now recognized.